So I want to talk to you about having too many inquiries on your credit report. The thing is that when we talk about having too many inquiries on the credit report, it's not just about the quantity of inquiries; it's about their impact. What I'm trying to say is that when you have an inquiry that relates to credit cards, for instance, it doesn't have the same impact as if you have inquiries that relate to a mortgage application or inquiries that relate to a car loan, for instance. So you have some kind of magnitude you got to think about when you think about the inquiries. It's very important to understand that when you apply for a credit card or a loan, your lender conducts a hard inquiry into your credit. And since hard inquiries affect your credit score and what is found may even affect approval, it's important to keep your inquiries to a minimum. And when we talk about inquiries, I mean, you have to understand an inquiry, a hard inquiry, because you have a soft pull and you have a hard pull. A soft pull doesn't affect your credit score, but a hard pull will actually decrease your credit score by 5 to 15 points. So, and that's really important because if your credit score is already low and you are risking 10 points minus with every inquiry, that could be problematic. Okay, so we are talking about having an opportunity to understand that when we talk about a credit inquiry, a hard credit inquiry, it can be anything, but it's usually it's a hard pull. Okay, so too many inquiries, it doesn't matter if it's too many soft pulls, because soft pulls do not affect your credit score, but hard pulls do. And it's one of those things where we're talking about those inquiries that help a lender determine eligibility for all kinds of credit products. Okay, so it can be loans, lines of credits, or credit cards. And hard pulls are basically a necessary and unavoidable part of extending credit in most circumstances. What I'm trying to say is that when you have a soft pull, even if you have a soft pull, you are able to get an idea of what you could qualify for. But if you're interested in going a little further, you're going to have a hard pull. I mean, a lender will do a hard pull before extending credit to you because bottom line is otherwise how would they actually cover their butt if they have no idea who you really are? Because a soft pull doesn't give them how do I say it, the totality of information they need before extending credit. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So when we talk about too many inquiries on your credit report, it's really important to understand that timing plays an important role also. So hard inquiries remain on your credit report for about 2 years. However, this does not necessarily mean that they will hurt your credit score for this long. Generally speaking, as I said a little earlier, the effects of a hard pull on your credit score are not significant and the impact usually lessens over time. So not significant means 5 to 15 points off. And credit card applications can be considered hard or soft inquiries depending on the lender. So a credit card application, as well as other applications, such as for auto loans and mortgages, requires a hard inquiry. Soft inquiries, however, can be used as part of the pre-approval process. So the pre-approval process will actually trigger a soft pull. And the thing is that when we talk about hard inquiries, they can really affect your chances of getting a credit card. I mean, having too many hard inquiries can hurt your credit score and potentially make it harder for you to get approved for a credit card. Let me give you an example. If you apply for multiple credit cards within a short period of time, this may appear as a red flag for the issuer, right? So, and they may be suspicious that you potentially may not make payments back on time towards your current credit cards or are looking to make purchases that you may not be able to pay off. And this is really important for them in terms of your risk tolerance. If you collect about 6 hard inquiries within 1 year and on your credit report, you may have a difficult time getting approval for future cards and other lines of credit. So hard pulls can affect your credit score and may also hurt your eligibility for new credit cards and or loans, especially if the number of inquiries reaches 6. So 6 is really the magic number here for you to really keep in mind so that you don't fall into that trap. So if you it's one of those things where you need to understand that hard inquiries are a necessary part of the process of getting a new line of credit, but you just have to limit how often you get them, right? How often you apply for credit in the first place. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about too many inquiries on your credit report. How do you manage the whole thing? Let's talk about something that a lot of folks are constantly thinking about. How many credit inquiries are too many? Because the whole thing is people say, well, too many inquiries. I mean, 5, 10, 20, whatever. I mean, what is it? It really depends. It really depends. And so while there is no such thing as too many hard credit inquiries, each hard inquiry can drop a credit score by a few points, 5 to 15 points, and make the borrower appear riskier to lenders. A lot of credit card credit card providers, they talk about 6 being the magic number, but based on our research, we see that a number that is pretty much more reasonable is 8 to 12 credit inquiries within a year. So within 12 months, if you have 8 to 12 hard inquiries, this could be problematic. Okay, and the thing is that I'm not talking about soft pulls, soft inquiries. We are speaking about hard pulls, because basically when we talk about multiple inquiries, multiple soft pull don't have no effect, right? No impact. It's one of those things where you have to understand that a hard inquiry becomes hard whenever you or a legally authorized company, person, or organization obtains your credit information. That's when you have a hard inquiry. And so a hard inquiry basically is an entry on your credit report known as inquiry. And that's one of those things where you have to manage them. Now, one thing I need to say is that when we talk about how many inquiries represent too many, it really depends also on your credit score. Let's say if you have 700 and you have 20 inquiries and you have a credit history that spans over 20 years, the credit card provider or the lender, for that matter, will look at things contextually and see that you are good to go. But if your credit score is 500 and you are in your 20s, okay, and you have a credit history of 1 year or less, and you have the same number of inquiries, hard inquiries, we're speaking about 20 inquiries. That's really a lot, and they will start looking at you as very risky, and that's the kind of category you do not want to be in, like a riskier borrower or a riskier credit card applicant. That could be problematic for you over the long term. It's one of those things where when we talk about hard credit inquiries, and I already give you a number of 6 to 12 or 8 to 12, right? But you have to understand that in some cases, when we talk about how many hard credit inquiries are too many, we are speaking also in conjunction with a second person. So if you have a joint account, if you have joint credit cards, if you have co-borrowed loans or lines of credit, if your credit score is actually associated with another person, then when we talk about hard credit inquiries, you have to understand the other person's hard credit inquiries are also affecting yours, right? Because the lender or credit card provider is analyzing your accounts together. So it's one of those things where you have to really you got to think contextually, but you also have to think jointly. Okay, and so the bottom line here is what you want to look at your credit situation by yourself, but also with your spouse, with a friend with whom you actually co-sign a loan or line of credit or something else. If you actually have vouched for somebody else, if you guarantee the payment of a loan for somebody else, got to be thinking about that as well. Now, how many hard credit inquiries you have on your credit report can actually can have an effect, if you will, in your when it comes to rate shopping, right? Because if you are in the market for a loan and want to find out, what's the best interest rate for you, you have to apply for quotes from multiple lenders, and each of which can trigger a new hard credit inquiry. The good news is that these inquiries may be treated as a single hard inquiry as long as they're all made within a short time span, usually 14 to 45 days, depending on the credit scoring model. And so both FICO and VantageScore models allow for this type of comparison shopping. So rate shopping can be done safely. You don't have to you don't have to worry about losing too many points off your credit score. So therefore, if you are looking for a loan, let's say a mortgage, auto loan, or student loan, rate shopping should have a nominal impact on your credit score, despite a cluster of multiple hard inquiries appearing on your credit report back to back. So here, chronology plays an important role, right? Timing plays an important role. So to boost your chances of a single inquiry outcome, it's a smart idea to conduct all rate shopping, if you will, within a 2 week window. And to expedite the application process, make sure that you first gather all the necessary financial documents. That way you can really get things done a lot faster. That's what you need anyway. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about too many inquiries on your credit report. How do you manage everything? Now, let's talk about. I want to really extend the conversation in terms of how hard credit inquiries affect your credit. Now, hard credit inquiries can affect your credit by 5 to 15 points. I've already said that before. But the thing here is that when you think about the history of your credit report and your current credit score itself, those are elements that really can help you sort of gauge how far you can go in terms of credit score monitoring. And the thing is that it's one of those things where we actually advise all our clients and business and viewers to always think about the impact of your credit score in terms of timing. So basically, if you have 650 as a FICO score, if you have 10 credit inquiries, the impact will not be the same as if you have 740 or 720 for that matter, right? So always think about the timing. Always think about your current credit score. Also think about the future. So in other words, are you actually planning to apply for a credit card or a loan or a mortgage or a line of credit within 3 months, within 6 months, within 1 year? So you want to have what we call a prospective analysis to see how a future action will impact your current credit score and vice versa. So this is the kind of analysis you got to constantly think about. One thing I want to say here is that when we talk about rate shopping, I was talking to you earlier about rate shopping when I said that when you do everything within a 14-day period, yes, but it's one of those things where it goes back to what I said a little earlier. So you want to play things. You want to ask yourself, do I want to apply for a car loan within 3 months? Do I want to apply for a mortgage within 3 months? Do I want to apply for a student loan within 3 months? When you have this prospective analysis, you have a clear idea how you are going to allocate your credit in the next 3 months. And if you plan things correctly, if you do things satisfactorily, you are able to not only please the prospective lenders that you are going to apply at, but you also are going to please your FICO score, and that's the most important thing. You want to have hard inquiries that have minimum impact on your FICO score. Now, when we talk about hard inquiries on your credit, it's important to really understand that you are able to reduce the impact of those inquiries on your credit. I mean, it's one of those things where, I think I've made it clear throughout this conversation that hard inquiries are not going to stay on your credit score for a long time. But the thing is that there's also a possibility to reduce the impact of hard inquiries on your credit from the get-go. But the thing is, you have to know how to do things from the get-go. And so it's important to understand that if you have a positive credit history already, you are able to attain the negative impact of hard inquiries on your credit. In most cases, hard inquiries result in a temporary credit score drop that rebounds within a few months. I mean, within 3 to 5 months. In some cases, 6 to 7 to 8 months. So improving your credit score is one of the best ways to cushion the blow of hard inquiries. So when we talk about improving your credit score, we are speaking about a battery of actions that you can do on a regular basis. It's one of those things where you don't have to wait for a moment to start thinking, you know what, now I'm going to improve my credit score. It doesn't work that way. This is an ongoing process. So one thing for sure, you want to always make on-time payments across all your accounts. That will help you actually improve your credit score over time. You want to pay down your debt and keep your credit utilization ratio below 30%. And 30% is actually it's actually a threshold, but the lower the better. When it comes to CUR, credit utilization ratio, the lower the better. You want to pay off any past due accounts, including collections or charge-offs, if you can, of course. You do not want to damage your current budget because you want to pay off past debts. You always want to pay off past debts if possible, but you have to see how you can navigate your current situation. You want to periodically check your credit reports and credit score and pay close attention to the risk factors included with your score. It's one of those things where every credit score has a risk factors, so you have to see what really affects you. And you want to apply for credit only when you need it. So, and this goes back to what I said earlier in terms of timing. You want to apply for credit only when you need it. Do not apply for credit randomly. Close to this conversation about too many inquiries on your credit report, you have to understand that it's one of those things where you have a battery, you have a bevy, if you will, of lenders who check your credit score all the time. So I'm talking about your like banks, credit unions, insurance companies. A lot of folks do not, mortgage lenders, and so on and so forth. And a lot of folks don't know that insurance companies check your credit score also. For instance, when it comes to setting your insurance policy, your premiums you have to pay for car insurance, for instance, and other types of insurance policies. So it's one of those things where you have to really understand what's really important for you. And so in managing your credit score and trying to really time your hard inquiries, you have to always what we call contextualize your financial situation. In other words, what we advise our clients and business and viewers is to actually, at the same time you actually shop for car insurance, at the same time you can actually shop for a credit card. That way, everybody's checking your credit score or your credit report at the same time. So everything happens within 15 days, 15 to 30 days. So instead of actually doing one thing now and then going for another thing 1 month from now and then the next thing, no, you want to really concentrate all credit reporting or credit checking activities or credit triggering activities within a short window so that you know that everything is happening and they're checking your credit score at the same time. And one thing you need to understand is that there are some situations where if you, and I want to close on that, if you owe the IRS, if you owe past due taxes, you always want to pay your taxes. But if you have past due amounts, you want to talk to the IRS as soon as possible to have an installment plan, because a lot of lenders and credit card providers, they do not like at all that when they see a lien or let's say a collection event that the IRS is responsible for. In other words, if you don't pay your taxes, this could be really, really detrimental to your credit score and your credit report in general. So I just wanted to end on that. And when I say your taxes, I'm not just talking about the IRS at the federal level, but also at the state level. You want to make sure that you are actually current with all your tax obligations. Thank you so much for your attention. I really appreciate it. In today's conversation, I had a quick chat with you about too many inquiries in your credit report. How do you navigate everything and how do you do it efficiently? Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.